If I told you that a legacy hardware storage company was currently one of the absolute biggest winners of the entire AI boom, you honestly might not believe me. But Western Digital just reported a staggering $3.75 billion in quarterly revenue. I mean, that is up 44% year over year. Their gross margins just hit 54.1%, and they're generating, frankly, massive amounts of cash. The underlying company is clearly firing on all cylinders right now. But here's the central dilemma for us as investors looking at all this data.
We aren't exactly talking about some $10 or $20 budget stock anymore, right? At roughly $459 a share, the question isn't whether Western Digital is a good company. The data absolutely screams that it is. The real question we have to answer in this explainer is, did we already miss the boat? Is Western Digital actually still a good stock to buy after this incredible run, or is there still some meat left on the bone?
Okay, let's dive right into this. Today, we're breaking this explainer down into 5 quick parts. We're looking at the headline numbers, the AI data boom, a dividend reality check, the real risk of market expectations, and finally, my ultimate verdict.
All right, let's kick things off with part 1, peeling back those flashy headline numbers from their latest quarter.
The sheer forward momentum here is just wild. Back in Q2 of fiscal 2026, revenue was sitting at about $3.02 billion. But by Q4, it completely skyrocketed up to $3.75 billion. That's a 44% year-over-year jump. But you know what Wall Street loves even more than that? Management is out here expecting the next quarter to grow up to 49%. That is pure, unadulterated acceleration. But wait, there's actually a pretty vital plot twist in this earnings report. A casual glance at the headlines shows an $8.21 earnings per share, but you cannot assume that's just from everyday operations. Once you strip away the one-time accounting noise, the true operating earnings, the non-GAAP EPS, is $3.56. You've always got to look under the hood. That distinction is absolutely massive when you're trying to figure out a company's sustainable earnings power. And speaking of looking under the hood, this right here might just be the single most important number we talk about today, $1.28 billion. That is the pure free cash flow they generated in just one single quarter. Why does this matter so much? Because cash gives a company options, right? It lets them aggressively invest, wipe out their debt, or reward shareholders. It is essentially the ultimate indicator of a fundamentally healthy, thriving business.
So, we know the numbers are phenomenal, but what's actually fueling this fire? That brings us to part 2, the AI data boom.
Here is the part that I think a lot of people completely misunderstand. Western Digital, they don't need to be NVIDIA. They do not have to build the world's smartest, most complex AI brains. They just have to build the filing cabinets. Think about it. AI training and inference create a mind-boggling, honestly almost comical amount of data, and literally all of that data physically has to live somewhere. Western Digital is just providing the essential picks and shovels for this modern gold rush. Now that we understand the engine driving this, let's take a look at how they reward their shareholders directly in part 3. A dividend reality check. Now, at first glance, the dividend story looks pretty fantastic. Management has been incredibly aggressive recently, hiking the payout from 10 cents up to 15 cents over a really short period. That is a massive 50% increase in the payout, which sounds incredible, right? Well, until you actually sit down and do the math. Because the stock price has rocketed up to $459, that annualized dividend gives you a practically microscopic yield of 0.13%. Let's be brutally honest here. That yield is not even going to buy you a cup of coffee. Western Digital is strictly a growth play. The dividend is basically just a tiny little cherry on top. Which brings us right into part 4. And honestly, this is the most critical takeaway of this entire analysis: the real risk of expectations. Great earnings don't automatically equal a great stock price. When you are paying nearly $460 a share, you are essentially paying for perfection. The market doesn't care if Western Digital is just growing. It only cares if it's growing faster than Wall Street already expects it to. If you grow 25% but the market was demanding 40%, your stock is going to plummet. You absolutely must separate the underlying company from the stock itself. Obviously, you wouldn't sell today based on these blockbuster numbers, but you always need a watch list of red flags. Personally, I'd turn bearish if revenue growth suddenly plummets, or if those beautiful 54% gross margins suddenly collapse back down below 40%. The absolute most dangerous scenario for investors? A triple threat. Management cuts guidance, margins shrink, and cash flow dries up all at exactly the same time. Okay, we've weighed the massive growth,
the amazing AI tailwinds, that tiny yield, and those sky-high market expectations. Let's pull it all together for Part 5, the final verdict. So here is our synthesized investor scorecard. The top of the board is practically flawless. We're talking perfect 10s for revenue momentum and margin expansion, and a very strong 9 for AI exposure. But the bottom of the board definitely drags it down. The dividend is practically non-existent, and the entry price is steep, scoring just a 5. When you average the whole thing out, though, the underlying fundamentals score a very robust 8.3 out of 10. So here is the actual playbook. For long-term investors wanting that AI exposure, it is a buy, but accumulate gradually. Please do not just FOMO and chase this price all at once. If you already own it cheap, hold and just enjoy the ride. If you absolutely hate paying a premium, put it on watch and wait for a broader market pullback. And right now, honestly, there is no fundamental reason to sell.
The secret is definitely out on Western Digital. The company looks undeniably incredible right now. But is the current stock price already baking in a flawless future? Tracking their actual reality versus Wall Street's sky-high hype is the single most important game you need to play going forward. Thanks so much for joining me on this explainer, and hey, keep your eyes on that forward guidance.